Wall Street, quite a lift. Look at these numbers here at the bottom of the screen. But I want you to specifically look at the S&P 500. It's a better example of how the entire market feels. 500 stocks from all different sectors. This is what one of our all-star traders, Scott Redler, told you and us at this time yesterday. Listen.
I think we need to see whether or not this 2,700 on the S&P holds, because no sector is going to be that hot if we break that and close below it, considering the banks now are below the 200-day.
Okay, so that was yesterday, and when he said it, the S&P was trading 2 tiny points above 2,700. We did not close there. Scott was right. It did not hold. We closed at 2,699. But Scott's back with us today, and we've punched above that. So, Scott, educate our viewers. Why is that level that you pointed out yesterday of 2,700 so critically important to the market? And we're above it today. So now kind of shift the focus and tell us what happens if we close above it.
Well, you know what? Everyone needs points of reference. And as a trader, that's how you live your life. It's like the Bible. Okay, what are we going to do around an important level? And if you remember on Monday of this week, when the Dow was down 500 points, we actually hit 2698, right around 2,700, and we bounced off that. So that was considered our reactionary low. So traders were using that to figure out whether or not we could hold in. So yesterday, we were dancing around that 2,700, and people were worried if we don't hold that, we could see the 200-day at 2,670. So today, there was a little bit of a battleground there, but traders prepared with that 2,700. Once we reclaimed that around 10:30 today, you could have been a buyer of Spiders, Qs, a lot of stocks, and made some nice cash flow as a trader using that pivot as your gauge.
All right, Phil, that was the technical view. Now give me the fundamentals, the sort of hearts and minds type of story here. When you see a lot of green on the screen, were we just oversold, or is this the blip because Monday was a tough day, Wednesday was a tough day for the bulls? Do the bears show up tomorrow? Give us some guidance.
Was that to me? Okay. I don't think the bears come back right now. I think the market was oversold. They did hold that key technical level. And my feeling is, hey, the economy is doing great.
Yes,
I mean, we did see some data that was a little bit weak, but still, I think right now, if you look around the globe, the U.S. is the strongest player in town. And the hotter this trade war gets, the better the U.S. looks. We're seeing that being proven time and time again. I think President Trump, of course, is making some very strong hints that we're starting to hear from the players on the other side of this that they want to come back to the table, and they better.
You were not worried that the final print for first quarter GDP was trimmed and came in at 2% versus anywhere close to 3%?
I'm a little bit concerned, but I think it's temporary. I think we're going to see a bounce back in the second quarter. And if I look at the underlying fundamentals of the market, I look at the consumer confidence, I look at what we're seeing from these companies, the optimism is very, very strong. And that's going to translate into growth in the future. And I would not be shocked to see a big upward revision in the next GDP report.
Yep. And you know what? $1.5 trillion tax cut plan, Alan Nuckman, that's going to kick in Q2 unless the tariffs somehow vaporize some of that, because we already had a small business yesterday. It was a bourbon maker, and he's already getting crushed in Europe because he sells a lot of his product from Virginia to Europe. Right. You worried about any cancellation of positive salubrious effects?
I still remain very optimistic, and I got 2 words to describe what's happening: relief rally. So we saw a relief rally last week in oil. Now, that's something that we talked about. I thought that would be supportive of the overall market. That hasn't happened yet. We've got oil up 15% in 10 sessions, so that's helping out the energy sector that was beaten down. Now, if we look at the markets, I can make it very simple with what Scott was saying. We came back to our breakout level in the 2,700 level. That held on a weekly basis. If that holds again, we should make another attempt on 2,800 in the S&P and then attack those highs. Another two words I want to bring up: earnings season. That's coming up, and I think that's going to be the catalyst, and that'll remind the markets of the fundamentals and less about our worries and our woes right now.
You guys are smart, man. No wonder we have you on. Thanks, guys, very much. Scott, Phil, Alan, see you next time. We know this, basketball season, it's over, right, for the NBA, but MSG is making a slam dunk at this hour with the closing bell ringing in 46 minutes. Madison Square Garden hitting a new lifetime high.